Hello there, my name is Dimar, and this tutorial I'm going to teach you how to work with the bear and cat tech. For you to enable it, all you have to do is go to settings and enable cats and bears. But for you to work correctly, we're going to have to use all the other parts of this tutorial series that I created. So you're going to have to put simple buy, price average, bullish and bearish, market mood, and also the 21 EMA. When you get done in computing, it's going to show you something like this. So right in front of you, you can see already a good entry, but let's work with it. So the first thing for this work, you're going to have to come into a situation when you find a strong support, like this take profit of a short over here of the market move. You can see the box right over here, and you have the short, and you see a cat. When you see a cat, and you see close to your strong support, as soon as that this start closing over the support, you can enter right here and put your stop loss 0.50 off the cat itself. So you can do it like this. All right, so you're in the trade. After that, the first thing that is going to happen is that line that I told you in another video. There was the time frame line. It has to come to give you aid. In this case, we are in 15 minutes, so 15-minute line is this yellow one. Okay, so it comes over here to you, so it's just one more confirmation that this is going up. After that, you can see other lines start joining as well, and this line is very important, is the 21 EMA. Okay, you're gonna have to want, as soon as that this action start trending, you want to be following and adjusting your stop loss as follow. Okay, so you got in here, you got your stop loss off the wick of the cat 0.50, and you start moving on, right? So far, start getting straight, other lines join, right here became green again, ended up going into the cloud. The cloud is usually heavy resistance, and you're gonna go up. In this case, it failed over here, but came bounce exactly at view up and the 21. So you let it in. Right here, you have a situation. You have this bear, right? So that means it's the opposite of the cat. When the bear starts showing up, it means that momentum is trying to try to change back to the downside. As you can see over here, there's one over here. We just got a dealer pullback, found support, and went up. But once you start getting bears, you're just gonna get bears. You're not gonna get a cat right here. You're just gonna get bears, and the bears just gonna accumulate. And the more bears you have, the more weight it's gonna have to the market to go to the downside. Okay? So in this case, you had two options. You have option to close your long that you enter right here, there, or if you want to see what's going to happen, because the color of the candles, they are green, so indicating that the market is not in this size yet of what's wants to do. So you have this other tech saying to you, hey, maybe the market will go up still, so you can just stay in your long despite of this bear right here. Okay, so you are also above the box. So far so good. Came back inside the box, not that good, but the color of the candle is still green, so it's all good. Okay, so let it run. And didn't take time enough, another candle up. And green, green, and this time you see this bear right over here. You have a green candle, and this starts to falling, right? For this bear to get established, I mean get confirmed, you have to, this price action of this candle needs to be below the closing candle. So as you can see, as long that the price action is falling here, this bear is going to be up. If the price action goes over, the bear time cancel itself, so that means it's not time for the bear yet, and the market is just going to go up. In this situation, you can see pretty clear how we work with different techniques to get a better exit point. You had a bear, but the color were still green, so you keep it up. As soon as you see a bear and an indecision candle, it's more than enough reasons for you just to say, okay, I just don't want to mess with it, and let's wait for another cat somewhere so I can long again. Okay? So in this situation, you got this. You got 156, 18 hours. But for the stop loss, as soon as that you see that the price action is above the 21 EMA, you can just start adjusting your stop loss. How? Let's see here. Let's see that you have to go to bed, and then you want to sleep right here. Just adjust 50 off. Oops, 50, 50 off the EMA. Okay, so you can do this, go to bed, leave 50 off, and when you came back, you stay in the trade. Even if you get stopped out over here, you're gonna be a small profit, so it's all good, right? So just a simple example. I don't want to make these movies quite big so people get frustrated or bored. So I'm just trying to pass enough knowledge quick enough so can guys have the north of it. And if you have any kind of extra questions, just hit me up in Discord. I'd be more than glad to help you out. So again, you got this indecision candle here, and we ended up falling, found support over here, and this another support area that I have drawn before, and went up. Can I just long over here, just going into the basic of the candles? Yes, you can, but if you're gonna use this indication, this bear and cat, I recommend you to wait for another cat because we are in a bear territory now, as you can see, and all you're gonna get if you're gonna go up, you're gonna be bears. Oh, but I saw price action exploding up and everything else. Well, if you go up way enough, you're gonna have to exit this bear area, and there's not gonna be bears over here, right? You're gonna have to go to a higher time frame to check it out when it's gonna be the bears. And when you go to the higher time frame, you can see over here that 1 hour had a lot of bears, right? And all these bears got pretty much being stabbed out and oversaw. So you just see some small action to the downside, and market just keep going up. Not supposed to fall and everything else? No, just because the buying pressure is too big. And if you go to the simple technique of the cat and the 21 EMA, you can see here that you could just enter your long right over here because this is the bouncing line, right? It bounces things, as you can see, pretty good bounces. And over here, the market was very small. I mean, like this cloud over here was very small, so about almost turning into green. So the bullish momentum, you get in and just once you start trading inside the 21 EMA, you can just another confirmation, right? So keep your stop loss always 0.50 of the 21 EMA and you should be good. Just keep falling with the market in 21. Because even when it falls, it doesn't fall enough. Okay, yeah, there we go. And then you see this bear. You can even short in another position, but just keep your long. You may turn long. And keep following this all the way up. See? It's trading day in, day out, and you have your 0.50 going all the way up with you. Okay? See? Because it's a bull momentum, not a bearish one. Get over here until all the way here. So yeah, that's exactly where you get stopped. There. Yeah, 0.50, right? See? So if you get from here, from this cat, to there, you get 14% this uptrend. So it's not because you're getting bears that you have to just close your long and go with bears. You can just follow this other technique that's just follow the 21 EMA and get all the way up there without getting stopped and without worrying. And over here, in this other situation that I wanted to explain. When you get enough bear, and this bear is a pretty strong one, right? Because you had all these bounces there. And you have all these other bears over here after this one. So this is putting weight into the price action and say, hey, eventually this thing is just gonna fall, right? So we have this bear over here and got this 3%, right? Why? Because it failed, red candle. See the red candle? You can use the other technique I told you about the color of the candles. All these other bears over here, you can see when you start to fall with a red candle, you get more results than just green candles. See? Right there. Or you can even close at 4 hour here. Strong support, 4 hour. Remember, we're in the 1 hour, so if a 4 hour gives you support, it's going to be a good one. Okay? Always a higher time frame line helps you out every time. So that's the main difference. When you see a red candle forming and a bear, it's going to be a good result. A bear candle forming with a white, it's going to still indecision. So yeah, something, but it's not as good as this. Again, same thing. Indecision doesn't give you much. Green candle forming, you can pretty much say that was nothing, right? Indecision here, it doesn't give you much. Green candle falls a little bit, but still nothing. But when most likely you get indecision candle followed by the red candle, it's a good position. But you can see, well, this just bears, but not bear here, and all this happened. How can I catch that? Well, you can always see, put a line like this, and if we're in a bear territory, see, this is the bear territory. From here, pretty much to there, or over here. So if price action starts to go lower, I mean higher, you're gonna end up getting another bear and price is gonna retrace. And the cloud is bearish here too, so it's acting like a magnet to bring the price down too. Anyway, how can I get this resistance here? As you can see, clear resistance of the market mood. Got bounce in decision candle, so you're like, hey, something is about to happen here because you got resistance, then you have a indecision candle at the 1 hour. Where is the bear? If you go to the 4 hour, there's the bear. See? 4 hour exactly when you start falling and all this happen. All the way there, or you can wait until it bounces off the 21 right here. See? Not a bad entry at all. So the key thing is always check higher time frames and check resistance support so you can entry in a very strong support on a very good resistance. Okay? Thank you. Bye-bye.